every year, my predecessor, I've sort of been with CBRE since July, my predecessor, Mittal Patel, has traditionally run this and given his predictions. Ultimately, he's had a tough gig in 2019 with his predictions because 2020 would have been quite hard to predict. But today I'm going to go over Mittal's predictions. We'll see where he ended up. I'm going to provide our CBRE market outlook, looking at what we're expecting for 2021, and then I'm going to make my own predictions so we can revisit them next year. So in 2019, when Mittal would have made his predictions, the industry was already spinning a lot of plates. There was already quite a lot going on across the industry. Supply requirements were growing. We were seeing huge shifts in just, the pure size of the campuses being built, the density that was being required of these campuses. A lot of this being driven by cloud computing demand and the growth of the hyperscalers. To meet their requirements, we did see the introduction of build to suit, these providers coming into the market, building specifically to meet hyperscale needs. And then we're seeing also increasing appetite from the investment community. Data centers used to be, I guess, looked at as a bit of a dark art from some of the investors due to the complexity of some of these builds and the models themselves. But investors were already starting to take a lot more interest in the market and get a bit more comfortable with it. And we're seeing this identification of new hubs. So at CBRE, we track Frankfurt, London, Amsterdam, and Paris as the bellwether for a lot of the activity taking place, but we're also very ingrained in other markets across Europe. And we definitely started to see a lot of uptake in those other markets as well. And where we hadn't seen uptake, a lot of interest. Demand was also shifting. So I mentioned that hyperscale demand that was accounting for about 80% of the leased data center demand we were seeing in the market and continues to do so. But hyperscalers were also looking at markets differently. So they went into markets, they built out availability zones for delivering their services. We saw them expanding these availability zones. So first deployments, second deployments, third, to see availability zones grow. And this definitely happened in some of the key markets. Enterprises were also looking at co-location as being a cloud on-ramp. And this was driving new conversations with the retail colo firms in particular, and who were, starting to sell co-location as a vehicle for connectivity into services. And, it was starting to look a bit different, some of those conversations they were having with customers. But then we had COVID come along. And quite difficult to predict who ever going to have this, be living with COVID throughout this year. And particularly for a market, it sort of posed some challenges for a market that has built itself up around the premise of resiliency and availability. So with COVID, we saw demand for connectivity-focused co-location. This is one of the first things we saw with colo, really went through the roof, particularly as we saw a lot of business activities move online and workforces move online. Companies started to adopt technologies, take on Zoom, which we've become so comfortable with, all these remote working tools. Everything had to be established in a different way to keep businesses operating. And then throughout the course of the year, we looked at actually how we built in security to those, how we looked at these being a more permanent fixture of our business environment. The investor interest in the market continued to increase. It actually, I would say, kind of went through the roof over the course of the year, particularly as we saw, I guess, negative impacts to some other asset classes. If we look at sort of retail, for example, out there, and then we saw enterprises were once again rethinking IT strategies. They were starting to think as the year went on that maybe some of these, maybe what we're living with is a bit more long-term. Maybe we start to think where our workforce is permanently going to be situated. We're always going to have some kind of remote workforce in. We're going to keep these online services we've had to bring into our business. But also created some very real and quite physical challenges for the industry as well. So challenges with access to sites, particularly during that first lockdown. And we had real restrictions on what could take place from a construction point of view. Also in manufacturing plants where we had our mechanical and electrical gear being produced. We had planning delays due to reductions in staff in government departments, and also access to sites for customers, but also for those running these data centers. And some of those things have continued. We're operating with reduced construction teams, for example, and that's really created some impacts across the industry. At the same time, we're seeing some of the customer interest or demand continue and those requirements continue, but we did have some delayed customer and enterprise interest, as well as enterprises went back to the drawing board to rethink their strategies. Definitely heightened competition for M&A, and that really drove a bit of a land grab across Europe at the key European markets, but also the second-tier markets as well throughout the year. And we have seen, as more providers have entered this market or looked to enter this market and build up teams, it's definitely added more pressure to skills, let alone the pressure we've been seeing in the construction industry and operations industry as we've got more data centers coming online. So 2020 really was a year like no other. It was quite difficult to forecast. So that brings me to Mittens' predictions that he made in 2019 about the year. So his first one was that we would see build-to-suit and single-let would grow across the Flap and Dublin markets. And spot on. We definitely saw high activity, but this even happened outside of those Flap and Dublin markets. We saw the build-to-suit proposition really was based around speed to market and providing these hyperscalers with access to markets as well. So we've seen a lot of that growth happen in locations, or interest at least happen in locations from Warsaw, Zurich, Milan, etc. And I think we'll continue to do that over the next year. Mitt also predicted the 100 megawatts plus hyperscale colo commitments outside Flap, and I did put a cross about against this one. We hadn't seen any commitments of that size, but then I got to thinking he might mean that collectively, in which case we have seen collectively interest, if not for supply today, then for pre-lets in those markets. And we are seeing a lot more sort of growing requirements. We've definitely gotten up to about that rate. We've seen a lot of really large deals, particularly sort of signed across the Frankfurt and London markets, and collectively for availability zone rollouts or growth of availability zones. Our new US developers have definitely entered the market. There's more and more entering on a regular basis, but we're seeing a lot of interest as well from investors looking at this market from the Middle East, from Asia as well. So we're getting, quite a collective global interest in this market, as well as interest from Europe itself. And reduced M&A due to consolidation and significant recent activity. Really, a lot of these reductions, yes, they're coming about because of limited opportunities in the market today, but it's definitely not a signal of the appetite that we're seeing for investment. So really, to make my predictions, and I'm going to go back and give some explanation for Mittens as well. So let's just look at where we were in Q4 2019. In Q4 2019, 2020 was really looking up. It was already looking up, I should say. We had like 319 megawatts had just come into the market. We expected that it would take a year for that to be consumed. Of that 319, we had around about 200 megawatts of that was already was accounted for as take up. And then if we look at 2020, we're expecting about 230 megawatts to come online in 2020. And then in 2021, we were anticipating around 27 megawatts. So the market was going to take a bit of time to fill up all that massive supply, that record amount that we'd seen in 2019. And this is where we ended up. So in 2020, we actually only saw 163 megawatts come online. So what happened? Those COVID delays actually led to a lot of that pipeline being pushed out to future years. We still saw a pretty high take-up, around 200 megawatts is what we're looking at. And then if we're looking at 2020, though, we already have line of sight of about 400 megawatts coming online. So we've got another record year now pushed out. And that includes about 130 megawatts of supply that was pushed out from 2020 in terms of new supply coming online. Of that 400 megawatts for this year, we've already know of pre-lets for 200 megawatts. So that's pretty massive. That's pointing to pretty high demand as well as supply growth across these markets. Already for 2022, and these are sites that we know are definitely going to go ahead, or we think are definitely going to go ahead. They're sites that have been going through planning, etc. These aren't the highly speculative ones. In 2022, we've already got line of sight of more than 400 megawatts. So that says a lot about the market. We're entering a new era of growth if we can sustain this. So we have also seen pretty traditionally low historically low vacancy rates in markets like Frankfurt and Paris, with about 11 and 12%, whereas Amsterdam and London were about 25% of vacancy in those markets. And you can see where a lot of that take up is then going to go. We've got some of that suppressed demand will end up entering those markets. So we've got about 84 megawatts, for example, coming online in Paris over 2021, which is quite high. But we've also got growth in the second-tier markets. So Dublin, Zurich, and Milan, over the next few years, we're going to see quite high growth in those locations too. And so that brings me to my predictions then for this year ahead. So I think, there's still going to be a lot of interest. Build to suit is going to stay there in my predictions, but I'm going to put a twist on it and say that we're going to see the model change a bit. It's going to become a bit more speculative. What we've seen over the last year is more build to suit providers enter the market, and really the key proposition I mentioned before has been found to be enabling that entry, particularly into some new and emerging markets, especially where it's a bit more difficult for hyperscalers to do that themselves. And I think we'll start to see providers looking at these markets, trying to get ahead of the curve, looking at whether hyperscalers can actually might be winning deals or putting availability zones out to try and get ahead of that demand to increase speed to market even further against competition. We'll also see that growth of availability zones, but we've got power constraints, as I'm sure you will be discussing throughout today in some of the markets. If I use London or Schiphol in Amsterdam as examples, where the key availability zones are today in those markets, we've got power constraints. And I think that we will come to a point, or if they're not power constraints, there's land constraints. And that's going to force these hyperscalers who like to put out existing availability zones to seek new locations in those markets. And we'll see pre-lets continue to grow across those markets as well, all markets, I think. Enterprises will look more strategically at co-location. We expect to see a lot of enterprises that put a pause on their activity actually push on with some of their deployments into colo, most likely hybrid as a cloud, and colo over the course of the next year, and they'll be having quite different conversations with colo providers than they were last year. Governments are going to consider more markets for redundancy in its power use. I think the market has proven that it is highly important for the resiliency of a lot of the services that we've kept up and running over the last year due to COVID. But this has also put a spotlight on the industry in terms of how this might play into ongoing regulations, how we protect the redundancy and resiliency of our data center market. And at the same time, behind that, there's also going to be an increased emphasis on the amount of power the energy uses and maybe sustainability initiatives. And I'm going to throw in a wild card as well here. Be interesting to see where we are with this one going forward. So I think the face of retail co-location is really going to change. I think we're going to have a lot of providers, particularly as they look to attract many of those enterprises that are maybe now going on a journey to cloud, pushed on by COVID. I think they'll be considering more options for flexibility, maybe portability of services. We'll start to see some new, in some cases innovative, in some cases reactive models come out, at least for how these retail co-location providers will engage with their customers. And that's my predictions for the year ahead. Interested to see what they look like when we approach this next year. Thank you.
Thank you very much, Penny, and thank you for your interesting outlook again on the European market. I have two questions. In 2019, there was a prediction that we would see many players from the Asian market. What is your view on that for 2021 and beyond?
Yeah, definitely. I mean, I think there's definitely been a lot of interest. We've already got, if you look at the ownership of some of the companies that we've actually got here in Europe, we already have quite a lot of Asian ownership of organizations, and we've seen that definitely through the investment channels. And then we've got companies like Keppel. I think we'll continue to see to see that growth in the market and interest. I think the market really is. There seems to be so much opportunity here in Europe at the moment, particularly in some of these emerging locations, that I think we'll see the interest from across the board, and I think that will definitely continue.
Okay, good. And if you talked about like new markets that will come into play. If you look at new markets, it's a broad perspective. Is that the southern part of Europe, the eastern part of Europe, the northern part of Europe? Can you tell me us a little bit more about which market you will see going fast the next couple of years?
Yeah, I mean, I think a lot of the opportunity we're seeing at the moment has been down to the second tier markets. If I look at the likes of Zurich, Milan, Madrid, and these are markets where Warsaw, we've seen a lot of availability zone activity, Stockholm in the Nordics, and I think we'll continue to see growth there. They're really only kicking off and seeing that real groundswell of hyperscale interest just now. But at the same point in time, we know that there is a view to go into most markets where these cloud providers are doing any significant business. And that means there's opportunity across many of the other markets across Europe going forward. And we are starting to see that. It's early days for some of those markets at the moment. I guess the other alternative that we're seeing is that in some cases where we've got the main hubs, we are getting more questions and having more conversations around locations such as Berlin to Frankfurt and what role that might play as a secondary hub in country, but maybe serving a different German requirements, for example. And I think we will start to see that as well. Maybe new hubs explored. Some of those hubs might play the role of connectivity nodes. There might be locations such as Manchester, for example, in the UK. Or we might see, we're seeing increased interest in locations that might be subsea cable conduits, for example, like Marseille was to Paris in France. So I think there's a lot going on. Definitely, it's all about being opportunistic. There's a truth in some of these smaller markets, there's only so much opportunity depending on what the GDP of those markets might be, and so there'll be a race in some cases to be early providers. But the other thing to keep in mind as well is from a provider landscape point of view is that we see a lot of the demand going into those markets is international in nature, and as such quite often gets onboarded from other locations across Europe or globally.
Okay. Good, thank you. Looking forward to the year. I hope you too. We have, I think, a busy year ahead, and the digitization will continue at full force. So a lot of work and a lot of research is needed. So I'm hope to see what the predictions are already next year and what will happen this year. So thank you very much, Penny. You also had contributed to the Outlook report that we will publish next week. So for people who want to read about it, there will be a special section that is made by you that will be in the report. So thank you very much, Penny.
Hey, thanks for the opportunity.